Well, hello and welcome to this Money Control live stream. I'm Nandita Khemka, and today, of course, we'll be talking about the big story. RBI's clamp down on consumer loans. In fact, that's something that hasn't really come as a surprise, given the fact that the RBI governor had already spoken about the stress or the fact that he was uncomfortable with the kind of growth unsecured loans had seen over the last couple of years. In fact, in the last policy itself, RBI governor had alluded to the fact that there is some bit of discomfort when it comes to the growth in unsecured loans. Of course, we have seen the impact play out on stocks like SBI, Axis Bank, SBI Card, RBL Bank. All these banking and financial shares are under pressure today because the RBI has in fact increased the risk weights on personal loans from 100% to 125%. So how will it really impact the demand for loan? Will it lead to costlier loans going forward, and how will it really impact consumption, and what should really shareholders be watching out for? To put all that into perspective, I have with me Lata Venkatesh, who is the executive editor at CNBC TV18, joining in and putting things into perspective for us. Thanks a lot for joining in, Lata. First of all, I want to ask you, of course, we have seen some bit of reaction coming in stock prices. As I mentioned, it wasn't really a surprise because RBI had already said that there has been, there could be stress building up where unsecured loans are concerned, right? So in light of that, what impact do you feel we will see in terms of demand for loan and interest rates on loans going forward?
Okay. Well, first, I agree with you that something could come was a fear that gripped the market. But I didn't hear anyone saying that the measure would be so drastic. People were saying higher provisioning, standard provisioning and all that. And that's a small amount of money you have to set aside in case there is a future NPA. But this is, every loan has to be backed by more capital. If that loan is going to an NBFC or to an unsecured borrower, that was not something people had expected. So this is big, and certainly loans to NBFCs attracting higher capital was not expected. So I would think the first impact will be on NBFCs because they have a double whammy. Their cost of funds become expensive because a bank has to set aside more capital to give them that loan. They will raise the loan. If they were charging them 9%, they will make it 9.25, 9.3 something. So their cost, and they have to keep more capital when they give it to a credit card holder or an unsecured personal loan. So that cost, also the cost of that capital will be to built in. So if they were giving loans at say 15, they will make it 16.5, 17. There is clearly going to be loans becoming expensive. So first party NBFC getting hit, they may not be able to always pass on. So is there a margin hit? We have to see. The second part will be consumers. So is there a downturn in consumption? Therefore, will consumer companies be also impacted on the radar of stock market investors? We have to see that.
In terms of capital, most analysts that I have spoken to have said that banks are fairly well capitalized at the current juncture. So there is no risk there. But if you look at private banks, they may be well capitalized. What about PSU banks? Will they have to raise capital?
Okay, well, there are 2 points over here. You have to raise capital if you have given a lot of personal loans. Most of the PSU banks were not in that game. Retail loan was always an HDFC Bank preserve, and ICICI rapidly scaled it up, and so did Axis in the past, 5-6 years. Ever since corporate loans started going sour, they completely changed their strategy. So these people have 50-60% unsecured loan, I mean retail loans, some of which could be unsecured. So the requirement of capital also is more in HDFC Bank, ICICI Bank, banks like that, even maybe a little bit of Axis and Kotak. Their capital will get eaten up by about 60 basis points in the case of these big banks. SBI, we spoke to the chairman, so I can tell you with some authority from the horse's mouth itself that they have to use up about 55 basis points more of their capital. So if they had 12% capital adequacy, now that extra capital adequacy comes down to 11.45 because they've eaten up 55 basis points. That's the story as far as public sector banks are concerned. SBI is the biggest retail lender. Now PNB, they all don't have that much of retail and unsecured lending. To that extent they have capital. So I don't think capital is an issue for any of the banks.
Okay, but in the long term, do you think they have to redraw their growth strategies now, some of these banks, and will it have any kind of impact on their profitability? From a shareholder's perspective, I'm asking you this question.
I am not very sure it will have too much of an impact, but they have to keep an eye that it doesn't have an impact, because the personal loans are also high return loans. You know, if you take a credit card loan or something, you know, it's like per month 2%, 1.5%. It's a total of 24% interest that they charge. If they have to keep more capital on that, that 24% becomes 22%. Or, you know, the return on a bloated equity, because you have to keep more equity.
Yeah.
So therefore, and the board will monitor it. That is one of the rules the Reserve Bank has said. They'll monitor it very closely, whether you are eating up more capital, is it worth that? And therefore, they will lower it. Therefore, I mean, there is a small possibility that it has an impact on the ROE. Minor, but your high return loans are becoming expensive. So there could be a little impact, marginal. On I mean, instead of that, you are lending home loans, say.
Yeah.
लेकिन उसमें return कम है ना. Home loans cannot
But,
be more than 8-9%.
Do you think housing loan companies stand to benefit tactically from this?
Not so sure, yeah. I mean, I know some brokerages have said that because you're not putting capital. Now, in the first place, will you buy a home because I'm not able to buy a washing machine? I mean, it doesn't make, so demand wise it cannot. What about supply of home loans? If say the Kotaks and the HDFC banks and the ICICI banks, you know, don't want to put so much money in unsecured lending because it's eating up capital, they may take a part of their their bandwidth and say, why don't you all sell more home loans? So actually there may be more competition. I'm not quite convinced that HFCs stand to gain. All we can say is HFCs and vehicle finance companies are not impacted. Will they therefore get more demand? I cannot buy that theory.
Right, you know, I want to talk about the SBI card, companies like SBI card, you know, RBL Bank, etc. You know, given the fact that 100% of their AUM, in fact, you know, comes from
credit cards. SBI caps,
right?
yes.
SBI card, yeah. RBL 30% or something, as far as I know.
That's right.
And of course, SBI card is one company that has been already witnessing margin pressure. So this is an added burden for SBI card, right? So do you think you know, these companies financially stand to lose going forward, of course?
Well, there will be pressure. You can't deny that.
Yeah.
SBI cards, I don't know. I don't think they have to raise capital because the SBI chairman spoke on the channel and he said they don't have to raise capital, but you will have to have more buffers if you want to grow, because already for the existing book you have to set aside more capital, and every increasing loan has to be a credit card loan only. They can't branch into home loan. So they will have to increasingly need more capital. There is certainly, from their point of view, an ROE impact.
And you know, couple of
which is why I think it's the stock that lost more than others.
Yeah, SBI card did actually. I think at open it was down 10%, but then it did pare some of its losses. But you know, Bajaj Finance, you know, it's one of the most tracked and largest NBFCs, right? Asset quality at its best. Of course, margin pressure is likely to continue for a couple of quarters. But you know, just a couple of days ago, we had the RBI barring the company from disbursing loans under 2 products. So that was a setback, at least for the next 2 quarters. But now this as well comes as a setback. I think they had tightened their you know, unsecured loan business
anyways
earlier as well. But do you think now the impact on Bajaj Finance will be lesser compared to other NBFCs?
No, the impact is there. It is lesser in the sense that the chairman, SBI chairman said that, you know, for AAA companies, you don't have to raise capital so much. For A companies, A-rated companies. So that way, if Bajaj has less competition from those guys, he will get loans a little more easily. So his cost of capital will go up whenever he borrows from banks, but it may go up by 10 basis.
Okay, not as much as other
but
players.
compared to what he was previously, he will pay more, no? And likewise, he also has to set aside more capital for the loans that he gives. Of course, he's, I think, what, 20% capital or something. He's well capitalized. And this is a company which has proved through demonetization, through GST, through COVID, that they know their business. They know where they are lending.
They have aced the consumer loan business, right?
So I don't think they're going to land up with, you know, any risky loans or extra GNPAs or anything like that. They have to work a little harder. But Bajaj will come out of it. There will definitely be a slowdown because of those 2 apps, 2 products through which they cannot lend for some time.
For some time,
And it's not a big crime. It is not as if that they broke some rules.
It's just a deviation.
It's only a disclosure. What all do you tell in the KYC to the customer? What all do you reveal to him? According to RBI, they are not revealing enough, alerting him that, you know, your EMI will go up so much. Maybe something in terms of information to the customer is falling short. it doesn't seem like a technical glitch which takes time to do and stuff like that.
Yeah.
It looks very imminently doable. So there is going to be an impact for 1 quarter because they've been told not to lend on those. And the loan is going to become a little expensive. There's some impact. But of the rest, I think they have shown the capacity to take these things.
Right, I know my last question to you, since you speak to a lot of these market experts and experts who track banking shares as well, private banks have underperformed, and they there were concerns that they would continue to underperform in the wake of margin pressure as deposits get repriced. But do you think this will kind of prolong this spell of underperformance for private banks and even PSU banks now? So far they've done well, but of course this bit of development could be some bit of a dampener for some time, right? So do you think
no, it seems logical. It seems logical that the underperformance may continue because while we were expecting that their best period of highest margins are over, they were expected to stabilize their margins at some point. Now that margin pressure may happen a little. Either their volume of loans will go down or the margin will compress. For some of them, both may happen. As you come to the mid-cap range, the best borrowers are taken away by the HDFCs and the ICICIs and the SBIs and the bigger banks, which have government salary accounts and all that. The mid-cap banks do lend to the high-risk, high-return borrowers, and there, if it is also meaning more capital, certainly there is pressure. So underperformance of the financial sector is quite possible, and there is no extra reason why you have to buy now. I guess because the US yields have gone down, IT companies now are shining again. Consumer discretionaries, which will not be impacted because like people who are buying at Tanishq and all. I don't think they will be terribly worried because of a credit card overdraft. So some consumer companies could take a hit, but not all, I guess.
All right, I think it was a very fruitful conversation. Thanks a lot for putting things into perspective for us and our viewers. But I think with that, it's a wrap on this live, Money Control live stream. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.